What's going on, guys? It's Sunday evening, FOMC week, futures opened, and this is the first short Telegram update that I'm putting out in video, or rather on video. I'm sure a lot of you guys have been following me for quite some time by now. You guys know I was pretty active on YouTube for a bit. I tend to take breaks. I tend to promise more than I deliver when it comes to creating content. But I do aim to change that over the next year. I really want to switch it up. I really want to switch it up for my own sanity, to be honest. I also plan on adding an updated course, so a follow-up, and I have a few other things that I'm keeping in mind. I don't necessarily want to announce them yet. But either way, I think the Telegram is going to be a good place for me to share a lot more specifics, also to just kind of spit shit out and not to crowd Twitter with this. I have a lot of people that follow me on Twitter, and I think at this point, like a lot of people follow me on Twitter, not even for the market stuff. And when I do share things on Twitter with regard to specific trades, with regard to outlooks, short term, long term, it's really easy for it to get spread apart, and it's rather difficult to follow because of that. So I think the Telegram will be a little bit cleaner in that regard. Though I could very well easily start turning it into a place where I just, like Twitter, treat it like my front porch and yell off my porch every day. But either way, I just want to take a look at BTC. It's FOMC week. The market is split. If you're looking at Polymarket, I think Polymarket has its weight a little bit more towards 50 basis points. I have to double check that. But if you look at something like the CME rate decision tool, which is not the best thing. I mean, either way, it's close to 50-50. I think Bloomberg had it at like 52-48, something like that. But it's pretty much 50-50 right now, whether or not we get a 25 basis point or a 50 basis point cut. I personally think if we get a 50 basis point cut, I think the market sells off more strongly. I think the 50 basis point cut at that point, or at this point, indicates that the Fed is a little bit more concerned about a recession. But we'll see. I think in either case, whether or not it's 25 or 50, I think we're going to have a sell the news type of event. Now, I think if it's a 50 basis point cut, I think the sell the news event is a little bit more sustained, a little bit more prolonged, deeper, violent, whatever, what have you. Whereas the 25 basis point cut maybe is a little bit shorter in duration, and this could be different for equities than it is for crypto. Crypto's already been hammered for quite a while. As you know, equities have been, continually pushing up and have had a more significant bounce. Equities, I think, at this point are like 2% off all-time highs, whereas crypto, and speaking of crypto in general, using Bitcoin, is around 20% off the highs. So I'm more interested in Bitcoin right now. I don't care about alts at all. I mean, looks like some more idiosyncratic setup. Some of the stuff that's like crazy FDV to market cap, that was, really crowded for a long time, have some unlocks coming up. You see a lot of people starting to hedge this. It might be getting crowded on the short side of things, and if that spot selling that is being hedged in the futures market, if that begins to abate or gets absorbed, well, at some point then those hedges have to come off. Talking specifically about SU and things like TIA. TIA last night I was looking at it, it was like 27 basis points of negative funding. So pretty much every day, if you consider, 3 funding intervals, although it wasn't going to be maintained that way, it was around 1% a day if you're going to be holding, shorts. Obviously that changes, right? That's not static. That's why like annualizing funding rates tends to make the point a little bit more clear, but it's more extreme because you're not going to have the funding rates stay the same over a year period. But it's a really good idea of getting the idea across, or rather, excuse me, it's a good way of getting the idea across. So 27 basis points, negative 27 basis points. Think about it as 27% of 1%, right? Is pretty extreme. I think that has changed probably by this point. It was changing very quickly. But my point is, I'm not really interested in alts at all right now. I think that alts have a lot to prove. I prefer to trade alts as a momentum trade, kind of trade it all as one trade rather than look for, who is standing out on an individual basis. That's just not my area of confidence. It's not something I've ever been good at. It's at this point in my trading career, I'm not going to change my focus. I know what I'm good at. What I'm good at, I'm really good at. So there's no reason to really, have any kind of style drift. Or rather, I should say, fall victim to any kind of style drift. So I'm looking at Bitcoin because I think what's good for Bitcoin is good for the rest of the market. It's obviously no point in looking at ETH right now, although that could be a signal in and of itself. But there's a couple things worth pointing out about Bitcoin. So I pointed out the other day, I was asking whether or not you guys can see something on this chart right here. I figure I'd go over this right now this is not structured at all. I'm going to get my point across, but I'm going to touch on something else, obviously, and try to keep these short. So I was asking polling the crowd, what made this unique? What was a really strong signal about this? You had a couple people talking about double tops here, a couple people talk about swing failures. The thing that I was most interested in, and I'm most interested in because from a statistical standpoint, when you have this kind of structure, when you have a engulfing candle, right? When you have a bearish engulfing candle, right? So we probe above the high of the prior day, end up closing through the entire structure. You might have some people that talk about this as an engulfing structure, right? Where you have, let's say, for example, a green day and then you have a red day that probed through the high, right? Took out the prior days and then just closed through the prior day's open. The strongest version is obviously doing away with the entire day from a high to low standpoint. So, let's say you opened, closed, right? Obviously these two should be even, opened, and then probed above the high, right? So had price action, take out those highs, fail to see continuation on the day, and you end up closing through the entire structure. That's a really strong signal. That's a signal that you don't have a ton, right? You don't have that very often, but the times that you do, it's a really good sign of a reversal, right? So that's kind of the cherry on top for this setup. So whether or not it's a swing failure, and this one was by a hair, right? So spend a good amount of time away from something, have an impulsive move through, grab liquidity, no follow through, trap, reversal. The bearish engulfing made that, in my opinion, very strong. So that at least signaled, hey, time to risk off. Some of you guys have been following, you guys know that I sold 69 twice. So from March all the way through July, I ended up selling 69 again. But there's a couple reasons. My point is to really give this respect. The actual setup, though, the setup for a bearish engulfing, just to give you that right now, or rather how I would play this. Let's say this is the prior day, and this is unique because this is a red day followed by a bearish engulfing on after a red day rather than a green and then reversal. So this one is something that, I think this is a little bit more unique versus, the green day followed by a bearish engulfing. But either way, the setup for this is you have the engulfing close through the prior day's lows, and you're looking at the prior day's lows. So where you're seeing this interaction right here as being the level for buyers to either reclaim or sellers to take control. It's just a really good level, in my opinion, to define a trade. So rather than just like selling the lows, for example, you're giving this a little bit of time to retest that level, do some work, and especially since you're kind of testing a local SR flip right here. So let's get to, I'll go over things like this more specifically in follow-up videos. More specifically right now, be a little bit redundant and use that twice. Just taking a look at Bitcoin. There was a couple things that stood out, and this is something that I shared in the, I shared this in the Telegram. You have these highs with a lack of excess. Now it's going to depend on what kind of tick setting you use, and I'm using a 500 tick setting on these TPOs. We're at 60K. You could use a 250 and you still get poor highs. It's just going to be a little bit more granular, but you could see right here, and whether you're using the TPO on TradingView, it's pretty much the same story. You have these blunted highs, so blunted high here, blunted high here. So no excess, no probe beyond this. The market was able to just kind of hang out in that area. Now, things like that aren't necessarily they're not a trade on their own. It's not a long setup. It's not a short setup. But it's an area we really focus on because often the market returns to this level. And like I said earlier in the Telegram, if I'm currently long, this is something that might inspire me to hold a little bit longer. If price action is wishy-washy, I'm not getting any kind of clear signals. No clear signals of reversal. No price action is just kind of, like I said, wishy-washy. In this case, you have these poor highs. I would anticipate you'd at least have a stop run at this level. So right now, instead, we had this inside day structure. Market broke through that low, so we had the open. This is currently today. The high was put on Friday the 13th. Go figure. But yesterday now closed out, breaks outside of this inside day structure. So high, low inside the prior trend day. And it looks like right now we're just filling out an area that we kind of cruise through. So you had this imbalance move up. You leave this inefficiency behind. The bulls want this level to fill out and us to establish value within the structure, and you're kind of getting this little SR flip. So we kind of did away with the entirety of this impulse up. Now the impulse up was, there's a good amount of OI that comes on. It seems like we're just washing both sides. So I really wouldn't get excited about anything when you see futures get behind it. We did have Michael Saylor buy. There's a couple of reasons to maybe stay bullish when Coinbase was maintaining a premium for the last few days. But either way, the market hasn't done anything that significant. September's are not necessarily very good months. I do anticipate that into the election we'll have a little bit more, in my opinion, hopefully more clarity with regards to the actual what trend price takes. But right now into this week, we've had, for the last week, the market has been trending up, has been grinding up, and we're going to FOMC week. So I do think that when we're long into an event like this, I think it's best to exercise just a little bit of caution. In my opinion, now that we're having 3 red days in a row, best case scenario, we end up retesting this 58 level, seeing sellers get a little bit over their skis there, maybe a little bit selling through the low, price rebid, capture a bunch of shorts below that level, and see some kind of constructive price action in this zone, and then ultimately just fill this out, right? So fill out that gap that existed between like 58.4 and like 59.2. So if we're going back and just cleaning things up and we're building value higher, that's great. But I would just be mindful that this is all into an event. It's all into FOMC. And in my opinion, what we want to see is, because if you look at this on the weekly, I see someone saying there's a higher low because of this wick. We continue to close lower. So we continue to close lower. What we haven't had, if we haven't had a situation where we've held like on a green week like this, where we've been able to hold that open. So ideally, we're able to get a higher close within the structure. So if we're just going to start here, I want to see that we're able to close above, let's just say 54, whatever it is, it's 54.8 something. But the market doesn't move much lower below this level. I could see, we continue to undo all these impulsive. Let me hook that back up the right spot. We continue to undo and trade back within all of these impulsive moves up. So you have imbalance moves up, imbalance moves down. We're just building value within an area where we kind of scoot through pretty quickly. So if we're going to continue to do that, and we're going to eventually just trade tighter and tighter sideways, you want to see that it's conclusively we're holding above at least one of the weekly opens, right? Whereas in the past, we've been able to kind of stab through those prior levels, and there hasn't been a really constructive bid that's followed through. So if we're going to continue to grind, move sideways, at this point, like I want to see something develop between here and 54.869. And what I mean is, like, if market sells off after FOMC, I'm not necessarily worried if all we do is just keep doing what we've done, right? I mean, at this point, the market has to move, in my opinion, it has to go back through 52s for me to get really worried. Otherwise, I could see a situation where we kind of just chop. That's not necessarily the right color to use. Where's my box? I could see a situation where we are compressing, right? And then we build something that is a little bit of a longer range, but a little bit more defined in a tighter region. And then you have at least a decent trigger to go off of. So whether or not we get, the remainder of September through here, and then we're into October, and then we're rebid above a clear structure that's painted and that was compressed as well. So all this shit is pretty wide, right? So if we build something that's tight, I think it's much more easy to define, hey, there's a significant shift that's occurred. Market has been rejected, moving lower, right? Bears are no longer in control, right? Clearly, there's a bid here, and if we're moving sideways into October, and then we're trading above like 60K at that point, I think there's a good case for this going much higher. So that's that. I mean, nothing major. Hopefully, it was coherent. I mean, just some last minute thoughts. Can't get this fucking eraser to work. Um, but yeah, I'm a little bit wary of the fact that we've been moving up into FOMC. Just looking at this from an open interest standpoint, I mean, from those lows, obviously, we've seen money come back into the market. I don't want to look at, just open interest like this at absolute levels and make any kind of judgments. Let's see, we have a spot bid that kind of took off a little bit. If you look at anywhere between 2.5 to 10% depth, that's what you're looking at right here. The two different colors for those windows, so 5 to 10, and then I think 2.5 to 5. You can see it's kind of backed off a little bit. So I think you're going to see things kind of back off into FOMC period. Right, spread should widen. Market probably going to trade a little bit thinner into that. But yeah, I mean, if stocks end up taking a hit, I doubt Bitcoin is able to hold up in the face of that, and that's because we've seen the correlation come back pretty strongly between BTC and equity indices. So specifically, I think in order, it's Russell, NASDAQ, and then ES. Some people are hopeful that Bitcoin follows gold, but that correlation really hasn't been there for a while. From a directional standpoint, markets, yeah, both markets are moving up, right? But longer time frames, right? I think they'll move up together, but I think more importantly, just Bitcoin's following a risk at this point. So I don't know if there's anything else that stands out from a TPO standpoint. Yeah, I would anticipate that this should be the low of this pullback. If we're going to remain bullish and move up into the week, into Wednesday, so FOMC is on Wednesday, it's not like it's tomorrow. This is the level you want to see hold. You don't want to see us trading back below prior POCs, back below this launching point on Friday open. If anything, if you're going to give some credit to the bulls, maybe it's just a case that we're filling out this inefficiency, and that's all we've kind of been doing anyway. We've been marking up and then backfilling, but a change would be if we're able now to backfill and move higher rather than backfill and then end up taking out lows that were uninterrupted on the way up. So anytime you have kind of a structure like this, right? This is the last time the lows were taken here. Structure like that, hasn't been well defended recently, right? Because we've had open interest build up, leverage build up into these structures. You get a pullback to like a minor level, market marks up and then ends up cascading through this because you have a good amount of liquidity and stops there. So a nice change would be obviously seeing a significant rebid at an even insignificant level or a minor level. But I'll follow up tomorrow. This is just some Sunday thoughts, and I appreciate you guys tuning in. Be well.